This is Akashvani, Thiruvananthapuram. In today's English program, we have with us Sri S. Khader Rahman, IRS, Chief Commissioner, Central Tax, Central Excise and Customs, Thiruvananthapuram Zone, briefing us about the major steps that have been taken in the 56th GST Council meeting. Let's listen to him.
The 56th GST Council meeting held on 3rd September 2025 marks a pivotal chapter in this journey with deep and wide-ranging changes aiming to boost inclusion, simplify complications and drive affordability. The rate rationalization and reforms was done based on 3 pillars. Pillar 1, structural reforms with respect to inverted duty structure correction, resolving classification issue, stability and predictability. Pillar 2, rate rationalization for reduction of taxes on common man items and aspirational goods, reduction of rate slabs and compensation cess. Pillar 3, ease of living with respect to registration, returns filing and refunds. First, I would like to brief on the changes in the rates with respect to goods sector. I have to say there is a sharp rate reduction over 100 goods, where especially on essential and everyday items. Key examples are food, milk and paneer. GST rate has been reduced from 5 to nil, condensed milk from 12 to 5%, cheese and butter reduced from 12 to 5%, pizza bread and Indian breads, it has been made nil from the existing 5 to 18%, a wide array of dried fruits, nuts and legumes, it has been reduced from 12 to 18% to 5%, and several snacks, juices and non-alcoholic beverages have been similar cuts. On health sector, life-saving medicines for rare diseases has been reduced from 5% to nil. General drugs and surgical products now at 5%. Medicinal grade oxygen, diagnostic kits and devices like glucometers, occlusion devices, it has been reduced from 12 to 5%. Coming to renewable energy, solar water heaters, biogas plants, windmills and parts for green energy manufacturing now at reduced 5% from 12. Textiles and agriculture, yarn, wadding, non-wovens, rubber, thread, machinery, tractor parts and irrigation system have moved into the 5% bracket, benefiting the manufacturers and farmers. Similar changes have been done in services also. In hotel accommodation, GST drops to 5% from 12% for rooms below Rs 7,500 per unit per day, making travel and hospitality more accessible. Job work and professional services, GST has been reduced to 5% for most job work, umbrella, textiles, pharmaceutical, leather, bricks, etc., encouraging outsourcing and employment generation in MSMEs. At the same time, regular job work has been increased to 18% from 12%. Public health and insurance, individual life and health insurance is now exempted, reducing costs and supporting coverage expansion for the population. However, due to non-availability of the input tax credit, there could be variation in the premium prices. Timeline for implementation. I would like to say that all these changes in the rates of goods, except for seen goods, except for services, would come into effect from 22nd September 2025. For seen goods, it has been deferred. Honorable Finance Minister will decide the transition date. The rollout for the risk-based refunds, simplified registration scheme for small businesses and e-commerce sellers, aiding cash flows and compliance would be from 1st November 2025. I also would like to say the GST Appellate Tribunal accepting appeals from September 2025 with hearing starting from December and backlog deadline for the June 2026. I would like to mention about measures for facilitation of trade. Automated risk-based refunds, eligible exporters and those facing inverted duty structures will receive 90% of provisional refunds within days, drastically improving working capital of businesses. Simplified GST registration scheme has been rolled out. Low-risk businesses with monthly output below Rs 2.5 lakhs can receive registration within 3 days. small e-commerce sellers can benefit from pan-Indian registration bypassing the complex principal place of business requirement. I also would like to mention there is an amendment of place of supply rules. Exporters of intermediary services, that is commission agent, can now claim benefits of export when the client is located abroad, as rules default to recipient location as the place of supply, making India more competitive globally. Presently, the place of supply for this was location of the provider and was subjected to GST even though the client was abroad and there was recipient of the foreign inward remittances. The post-sale discount reforms. It is to clarify that lot of clarification rules for disclosure and credit notes. The discount now can be extended even if the same was not provided in the contract. I would like to mention what are the detailed impact on the businesses and for end-use consumers. Coming to the businesses, number one, cost and savings. Lower GST on key inputs and products, for example, food, medicine, textile, energy, etc. means more competitive pricing, improved margins, better cash flows, and wider market potential for domestic and export-focused businesses. Number two, compliance ease. Automated refunds cut wait times, simplified registration widens inclusion, and clearer valuation and discount rules reduce ambiguity, driving efficiency and transparency. 3. Sectoral uplift. Agriculture, textiles, food processing, health, and green energy stand to gain in investment, employment, and output due to reduced tax burdens and easier market entry. Detailed impacts for the end consumers. 1. Cheaper essentials. The maximum impact is on processed food, medicines, everyday consumer goods, and items related to health and personal care. The common man, middle class, and vulnerable sections see prices drop and choices expand. Number 2, health and welfare. Exemption for health and life insurance and higher taxes on sin goods discourage unhealthy consumption. The CBIC has issued FAQ, frequently asked questions, about rate changes and implications after 56 GST Council meeting. I would like to quote few of them to make things very clear. Question is, why are some rates increasing sharply? For this, the clarification has been given that for goods like pan masala, tobacco, aerated beverages and luxury vehicles, higher taxes of 40% has been proposed. However, these goods suffered compensation cess up to 15% in addition to 28% GST, and hence the increase is not much if the compensation cess is being done away with. Another question is, how will the GST 80 help businesses? The answer is, the newly operational tribunal will quicken dispute resolution, bring consistency in GST administration, and boost taxpayers' confidence. For the want of tribunals, the taxpayer had to approach the High Court, which can be avoided now in many cases. How fast and easy is the new refund process? Eligible exporters and manufacturers can expect up to 90% provisional refunds for inverted duty structure and zero-rated supply within 7 days, freeing up cash flows for investment. As per the present provision, the time limited is 30 days. What are the biggest positives for MSMEs and traders? Simplified registration and easier compliance will allow smaller players to scale, participate in e-commerce, and to compete across states without heavy paperwork or risks. Can consumers expect prices to fall across all sectors? While most essentials will see lower prices, some items, luxury sin goods, could get pricier. Net effect, widespread affordability and welfare gain. I would like to mention key action points for business review. This is very important for all the registered taxpayers in the country. I would like to urge the update ERP and accounting systems. Our advice is revise GST rates in invoicing, accounting, billing, and ERP schemes to reflect the latest notified rates for all products and services effective from 22nd September 2025. Of course, except for sin goods, with deferred implementation. With respect to ERP, I want to say that ensure mapping for the new HSN codes and sector definitions in product masters and GST returns. I would like to say recalculate pricing of impacted goods and services to pass on benefits where rates are reduced or manage cost implications where rates are increased. For example, carbonated drinks, etc. Assess necessity for contract amendments due to GST rate changes, especially for long-term agreements or contracts running into or after the transition date. Communicate with stakeholders. Inform customers of price changes due to revised GST rates. Please update suppliers and vendors, especially on new rate applicability to purchases in transit and input credits. Please highlight an GST impact on product services quotations. Review input tax credit impact, meaning assess the changes in ITC accumulation, availing and reversal due to altered input rates, inverted duty structure, refunds and post-sale discounts. Please adjust budgeting for refunds, particularly with new risk-based refunds. Conduct product and service classification audit. Please re-examine HSN and service codes for product services to verify GST rate fit, as rate changes often depend on precise classification. Please pay attention to new sectorial definitions and standout exclusions. Update legal and contractual templates. Please amend contracts, purchase orders, and sales agreements to reflect GST changes to pricing and payment terms. Include clauses for rate change handling in ongoing contracts to avoid payment disputes. Train your teams and strengthen compliance. Conduct training of finance, accounting, sales, and procurement teams for all GST changes, including new rates, refund procedures, registration schemes, and amendments to valuation discount rules. Monitor compliance dates for phased implementation and administrative refund reform. I would also like to advise plan for GST appellate tribunal activation. Prepare or expedite backlog appeals for submission before the new GST appellate tribunal, noting the deadline of 30th June 2026. Please align ongoing disputes and advance ruling applications to new procedures. Communicate refund and credit procedures. Please inform your finance teams about risk-based provisional refund process, that is automated sanction of 90% refund for inverted duty structure and exports starting from 1st November 2025, and ensure updated documentation for claim eligibility. Monitor regulatory notifications. Track upcoming CBSE notifications, circulars for further clarity, especially on the implementation date for sin goods, revised rates, and sector-specific procedures. I would like to conclude by saying that timely and proactive review is critical to avoid compliance issues, unlock refunds, and realize business savings from the updates. Coordination between the tax, finance, sales, IT, and legal teams in your businesses is essential for the smooth transition and to leverage the benefits introduced by the 56th GST Council meeting. Thank you.
That was Sri S. Khader Rahman, IRS, Chief Commissioner, Central Tax, Central Excise and Customs, Thiruvananthapuram Zone, elaborating about the major steps that have been taken in the 56th GST Council meeting. Thank you so much for listening. This broadcast came to you from Akashvani, Thiruvananthapuram.